Was that
Okay, so
Kelsey?
yeah, Kelsey was there.
Hi, Kelsey.
Hi, John.
Okay, so I think we're okay now. So, John, John Arve, right at 11, you can start the introduction, and then John Scheidler can continue on with the webinar. Okay? All right, I will mute myself, and then I think we're ready to go right at 11.
Sounds great. Thank you, Andrew.
Andrew, I have a question.
Yeah,
Should I turn my camera on or leave it off?
uh, it would probably be good to have it on while you're presenting, just so people can see you and
Okay,
think it makes it more personal.
sure. Okay. Yes.
Good evening, folks. Thank you so much for joining us. My name is John Arve. I'm the Business Development Manager for Omnex Future Past, and we appreciate you joining this webinar. I'm going to introduce you to Dr. John Scheidler, who is our Managing Director for Omnex Future Past. We're a Michigan-based firm that provides consulting, training, and verification services to organizations focused on mitigating the impacts of climate change and accelerating the transition to a low-carbon economy. John is an experienced greenhouse gas consultant and verifier and U.S. expert to the ISO committees that publish international standards related to climate change and sustainability. John currently is working on a new ISO standard for the verification and validation of sustainability information. He also helped to write the ISO 14064-3, a widely used standard for the verification and validation of greenhouse gas statements. In addition, he convened the working group that produced ISO 1430, Green Debt Instruments, a standard in 4 parts addressing green bonds, green loans, a taxonomy and a verification program requirements. From 2023 to 2024, he co-convened the ESG Exchange's practice group on decarbonization. John is the co-author with Jean Hessel of the book Introduction to Climate Change Management, Transitioning to a Low Carbon Economy, published by Springer Nature in 2022. John earned his Doctor of Philosophy degree at the University of California, Berkeley. I'd like to welcome and invite John to go ahead and take over. And again, thank you very much for joining.
Thank you very much, John, and welcome to everybody in this webinar. Our topic today is the implementation of Senate Bills 253 and Senate Bill 261 in California that will have an impact on companies doing business in California. Before I get to the main topic of the webinar, I'd like to tell you about who we are, Omnex Future Past. We're a combination of Omnex Inc. and Future Past Inc. in a new subsidiary of Omnex. And coincidentally, today marks the 1-year anniversary of that merger, which happened a year ago today. We are an independent conformity assessment body accredited by the ANSI National Accreditation Board for greenhouse gas validation and verification. We're also accredited by the California Air Resources Board in the mandatory reporting and cap and trade programs. What we do is validate and verify environmental information. That includes the topics under review in today's webinar, as well as carbon footprints of product, environmental declarations, and project validations and verifications. We also have a product certification business, which is focused on the automotive industry, particularly electronic and electric vehicles, for functional safety, safety of the intended function, and cybersecurity. Sustainability is, in our belief, a pillar of management of all organizations. This begins with the reporting of organizational inventories, and so on. We also offer training courses on these topics, and we will get right into advisory services, which are essentially consulting on any of the topics that we address. Our only limitation on consulting is that if we consult, we cannot also provide accredited services for validation or verification. So the main topic of today's webinar are the new standards for reporting of greenhouse gas emissions, and also Senate Bill 261, which is about sustainability reporting more generally speaking. Let's talk first about Senate Bill 253. This is the legislation that requires the reporting in 2026 of 2025 Scope 1 and Scope 2 emissions. We'll begin with who needs to report. The criteria for reporting are under development by the California Resources Board. They are currently developing a regulation. And what we know right now is what is in the legislation itself. But the regulation is due to be finalized probably by mid-December of this year. So who reports? Companies with more than $1 billion in sales. And this is not limited to California. It is worldwide sales of any company that is established or incorporated in the United States. They also have to meet the test of doing business in California. That's a pretty low threshold, however, because it only requires about $750,000 worth of sales, or a couple of employees, or a couple of properties in California. So most companies that meet the requirement of $1 billion in sales will also probably meet the requirement for doing business in California. ARB has estimated that that's about 2,600 companies. There are some potentially exempt companies under the proposed regulation. Nonprofit organizations may be exempt in the final rule, or companies whose only business in California is the presence of teleworking employees. So just consider that a different category of worker than, say, 1 or 2 or 3 or 4 employees who manage a warehouse. A single warehouse in California could meet the threshold criteria for doing business in California. And if they have employees who report to work every day, it's almost certain that they will qualify. Another exemption is the California System Operator for Distribution of Electricity, CAISO, or any other business entity whose only activity within California consists of wholesale electricity transactions that occur in interstate commerce. Think about the Bonneville Power Administration, for example. Insurance companies were already exempt due to a provision in the legislation itself. So just last month, ARB published a list of potentially covered entities, which is available on its website. If you have any doubt about whether you're likely to be covered, first of all, you have to consider your own annual revenue and the criterion for doing business in California. This survey, though, which is available on the link that I've got listed here in the second bullet, will get you in touch with ARB, and they will then engage with you about whether or not they think that you're eligible or required to report. You may also find out that you qualify for an exemption if you use this survey and start interacting with ARB. We are now in the process of ARB developing its climate disclosure regulation. So for mandatory reporting of greenhouse gases under Senate Bill 253, you can consult the legislation itself, which was amended by Senate Bill 219. And this is what we know for sure about the requirements for reporting under this new program. ARB has held a couple of workshops, one in May, another one just last month or late August. Yeah, late August. And they've announced their proposed schedule for finalizing the regulation. They expected to propose rulemaking by October 14th, but I believe they missed that milestone because I haven't seen the notice. Tomorrow they were supposed to start the 45-day comment period on that proposed rulemaking. Again, I think that may have been delayed a little bit. And by December 11th and 12th, they expect the California Air Resources Board to consider adopting their proposed rule under the Administrative Procedures Act of California. So what are the reporting requirements under Senate Bill 253? Well, according to the legislation, companies will report all of their Scope 1 and Scope 2 emissions. This all of provision is a little bit problematic from a greenhouse gas reporting point of view. So it begins with the 2025 report, which is due in 2026. And then starting in 2026, January 1st, you will begin reporting all of your Scope 1, Scope 2, and Scope 3 emissions. And those reports will be due in 2027. So the question about what does all of their emissions mean is one that we should take into consideration with the final rule, first of all. And then secondly, with the Greenhouse Gas Protocol, which is based upon 5 principles. The first 2 of those are relevance and completeness. Relevance and completeness may be a little bit in opposition to each other, because relevance suggests that only relevant emissions are reported, but completeness suggests that all emissions are reported. So if you're an oil and gas company and you have a few lunchrooms in your management operational centers, or a few trees planted in your parking lot, are those sources and sinks going to be relevant? Probably not. Whether they have to be reported, we'll have to wait until the regulation comes out to find out. But starting in next year, you'll have to report the Scope 1 and Scope 2 emissions from the previous year. That means 2025 emissions. And starting in 2027, which means that the data gathering will be in 2026, Scope 3 emissions are going to be added to what you must report for the prior fiscal year. In Senate Bill 2219, the legislature required that, provided that detail acceptable for use could include some industry average data, some proxy data, and other generic data. And this is probably in line with the 3 reporting methods that the Greenhouse Gas Protocol has, which is you can ask your supplier what their emissions are. You can consult a database like an LCA database, or you can use alternatively how much you spent or spend data and get that information from a data provider. There have been a lot of comments on the Scope 3 emissions in the comment periods. Many companies have cautioned ARB that collecting this data is very difficult and that it's of dubious quality, and that the reporting of this should be given extra time. Because California has existing a mandatory reporting regulation for facilities, I thought it worthwhile to mention that there is a big difference between facility level and organizational level reporting. If you're a mandatory reporter for a facility that perhaps is permitted by the California Air Resources Board for its air emissions, you only report what is in your permit boundary. But with the greenhouse gas protocol, it's designed to report emissions at the organizational level, which would include such facilities as corporate headquarters, warehouses, vehicle fleets, and so on and so forth that are not part of the mandatory reporting regulation. Now, the legislation does provide that you can use your mandatory reporting regulation data in your greenhouse gas inventory report. But I caution you that this will not be complete data because you'll have to also add whatever is relevant from the corporate level reporting as well. Now, it's very useful that ARB has just recently released a template for reporting greenhouse gas emissions. We have, Omnex Future Past has prepared many comments on this template because it's not completely consistent with the greenhouse gas protocol reporting. We believe that's a problem because it will affect your verifications and whether or not you get a clean opinion or a qualified opinion. And there's still time for you to submit your own comments on the template. They're accepting comments through October 27th. And there's a link on the last slide of this presentation to where you can download both the template and an associated memo with it, which also gives you directions on how to comment. The legislation assumes that the reports will be uploaded to a digital platform. As far as I know, they haven't designated who the digital platform provider will be. They have a couple of options. One, they could contract, especially for the first year, with an existing platform. The second is they could create their own platform, much as they have done for the mandatory reporting regulation. In any case, according to the law, the platform will be accessible to the public. It will feature the emissions data of reporting entities, and it will include a report on the public disclosures prepared by a third party that the ARB will designate, which will comment on the collected data each year on that same website. For 2025, given the fact that 2025 is mostly over, ARB will recognize a fairly flexible use of reporting standards. So if you're already a reporter to, for example, the US EPA, you may use that information. I think they will be relatively flexible for 2025 data, given the fact that they don't plan to have the regulation out until just before the first of the year. Everyone who is a covered entity will want to carefully review the issued regulation in December to find out what the rules are for reporting your 2026 emissions. We'll get into the other legislation, Senate Bill 261, on financial disclosures in the second half of this webinar. But just keep in mind that if you are subject to Senate Bill 253, you're also going to be reporting your under Senate Bill 261 as well, starting by January 21st, January 26th, as well as biannually after that, every 2 years. So what are the verification requirements? You must obtain limited assurance on your 2025 emission report by an independent third-party assurance provider. We are expecting that ARB will designate who is qualified to be an independent third-party assurance provider in 2026. And that the first few years of reporting will be performed, verification will be performed at the limited level of assurance. However, starting in 2030, for reporting year 2029, ARB, according to the law, will switch from limited assurance to a reasonable level of assurance. This will make your verifications more intensive, and it will include site visits, and the cost will certainly go up. By January 1st, 2027, ARB may establish an assurance requirement for Scope 3 emissions. And according to the legislation, that limited assurance level verification would begin in 2030. Again, stay tuned to the ARB regulation expected in mid-December for the details of how this is going to work. If you're not familiar with verification, there are two terms that we commonly use: limited assurance and reasonable assurance. For the time being, Senate Bill 253 requires limited assurance verification for Scope 1 and Scope 2 emissions. Limited assurance engagements are performed at the consolidated corporate reporting level and do not involve tracing of information back to source documents. On the other hand, a reasonable level of assurance does involve site visits and the tracing of data to sources, sinks, and reservoirs, and comparing the data in the report to source documents such as invoices, metering records, and the like. So it does take more time and it costs more money to perform a verification at the reasonable level of assurance. So this page lays out what the intended time frame for reporting emissions and for verification of emissions. In 2025, you will have collected your Scope 1 and Scope 2 emissions data, which you will report. ARB has been talking about reporting by the end of June 30th. That's not yet finalized because it will be in the final regulation. Some commenters have requested that ARB modify its reporting timeframes so that it is later in the year, but we'll have to wait and see. Starting in reporting year 2026, you must include Scope 3 emissions in your reports, and those will be verified in 2027. There are administrative penalties for not complying with this regulation. A notice of enforcement was sent out in late 2024, just to give people some advance notice that failure to comply with the law could result in penalties up to $500,000. So if you have any questions about this, we should have some time available before the end of the webinar to take your questions. I'm going to switch now to who must report climate change related financial risks. ARB estimates that this could affect up to 4,200 companies. The threshold for reporting is lower. It's only $500 million in annual sales. And again, with this proviso that to be within scope, you have to do business in California as determined by the California Franchise Tax Board or whatever other mechanism is decided in the final regulation. This is Senate Bill 261, and it was amended by Senate Bill 219. So climate risk reporting is done in accordance with a number of different mechanisms. ARB has issued guidance on this topic, and they've suggested that they will accept reporting done under the Task Force for Climate-Related Financial Disclosures. The International Financial Reporting Standard, IFRS, S1, S2, these are climate-related disclosures. And by the way, IFRS has taken over the TCFD website and the maintenance of it. They've pretty much incorporated TCFD requirements into the IFRS S2 standard. So you may want to look at the S2 standard for guidance. ARB has issued frequently asked questions in July 2025. That's a resource you can also view for information about how this reporting should take place. What are their expectations? That reporters will publicize on their website the results of their financial risk analysis. And if they are subject to other laws, maybe outside the United States, and they have adopted some other regulatory requirement for their financial risk exposure, ARB says that it will accept those in lieu of the TCFD or the IFRS. The reporting deadline is coming up very quickly. By January 1st, 2026, ARB is expecting a report to be posted to a website maintained by the reporter. and made available to the public. Now, they're hedging their bets a little bit also. They say that starting December 1st, you can report the link for your financial disclosures that are available. You can report that link to ARB starting December 1st, but they're giving you all the way until July 1st, 2026 to post a public link to their report. Now, this isn't necessarily relief from the reporting deadline, and we'll find out in the regulation what the consequences may be for being late. We think that perhaps they will provide some leniency in the first year, but we don't know that for sure. It's not in the legislation. The legislation has a hard date of January 1st, 2026. ARB expects that each disclosure will make a statement about the reporting framework the company is using, which recommendations from those frameworks have been complied with and which have not. If there are any that have not been complied with, then ARB expects the reporting entity to explain why those requirements were not met and what their plans are for disclosing against those requirements in the future. ARB expects that climate risk reporting will report on governance, on strategy, on risk management, and metrics and targets. So what are these and where do they come from? Well, they come from these reporting frameworks, which call out these 4 particular items to disclose. The details should include the management oversight of climate-related risks and opportunities, and if the company has a board of directors, what the board oversight mechanism is. Disclosures should describe climate-related risks and opportunities that the organization has identified over the short, medium, and long term. The impact of these risks and opportunities on the organization's operations, strategy, and financial planning, and the resilience of the organization's strategy, taking into account the expected climate change impacts both today and tomorrow and in the midterm and long term under various climate change scenarios. These disclosures should also mention what kind of metrics and targets are being used to manage risks, which is the last element in this group of 4 different kinds of reporting requirements. So, does financial risk reporting require assurance? The short answer is no, but any company with $500 million in business may want to seek assurance on its disclosures on a voluntary basis. If that's the case, Omnex FuturePast is available to discuss this topic with you. The question also comes up about if you have already been reporting against the TCFD, for example, requirements for a number of years. TCFD has been requiring greenhouse gas reporting. Well, that element of your report would be subject to third-party verification, especially in year 1, starting in 2026. and that is a requirement of Senate Bill 253. This is the page of the links that I've collected for you. In the first three, you can access Senate Bills 253, 261, and 219. This gives you the legislative parameters for the ARB regulation. 253, of course, is for greenhouse gas reporting. We know from this bill that the legislation specifically calls out the greenhouse gas protocol and its corporate accounting and reporting standard, its Scope 2 guidance, and its Scope 3 value chain requirements for Scope 3 emissions. So that will be part of the Air Resources Board regulation for sure, because it's in the legislation. There's a checklist, bullet number 4, for financial risk reporting, which you can download and get ready for that disclosure in December, or if you want to work on New Year's Day, you can wait until New Year's Day to upload your report. Then, in addition, there's the template that I just talked about, the draft Scope 1 and Scope 2 greenhouse gas reporting template. Like I say, this does not deal with all the greenhouse gas protocol requirements. So I recommend that you be aware that the final regulation may be different from what's in that draft template. The template can change, and Omnex Future Past, for example, has commented that the ARB should take into account all of the requirements of the greenhouse gas protocol and not be selective in those that it asks for reporting information on. So there is a draft memo for the template, and that's the next to last link. And then finally, there is this resources link, which takes you to the ARB page. And that would be a good page to bookmark, sign up for their automatic newsletter so that you're notified of new things that come out on the greenhouse gas reporting requirements or the financial risk disclosure requirements. So at this point, we've got a few minutes left in the hour. I'd like to turn it back over to the moderators for managing any questions and answers. And very happy to hear from you. And I'll do my best to answer your questions.
Check to see if we have any questions. To start with, one question is, my company is already reporting in CSRD as we are European. Do we need to report for this one? How can we ask for an exemption?
Well, unless you're a nonprofit or a wholesale provider of electricity emissions or an insurance company, I think it's unlikely that ARB will ask for an exemption. The reason for that is that ARB wants this information on its own platform. It wants it reporting complete for those companies that do business in California. Now, my speculation is, and this is purely speculation, I think that a company that uses CDP for annual reporting will find that ARB will be accepting of that report for the emission year 2025. But I also expect that for consistency reasons, they will probably want that report to be consistent with the greenhouse gas protocol for reporting year 2026 and onwards. Now, I'm not saying that CDP is inconsistent with the GHG protocol. It may be consistent, but there may be small differences in the reporting requirements according to the two reporting platforms.
Yeah, similar question was, she would like to know if a company reporting in the annual European URD can fulfill the California reporting requirement, knowing that the URD reporting is compliant with the European law CSRD and is audited by a third party. So I think a little clarification on the previous question as well.
Yeah, again, we haven't seen the final regulation. That's the first thing to note. But my understanding is that California would like its platform to have the reports and the third-party assurance on its platform. Now, whether they will accept the third-party assurance of the report submitted to their platform is another question. We will find out when they issue the final regulation.
Okay, and we have another question of, do you have any idea when you will see the final regulation released?
Well, it is not the draft regulation with a 45-day comment period. So for those people who just commented on existing reporting and whether or not that suffices, as soon as the 45-day comment period on the draft regulation comes out, and it was supposed to come out this week, if it didn't meet the deadline, then hopefully it'll come out next week. All interested parties are able to comment on the draft regulation. So if you don't find equivalency, for example, as the first two questions indicated, acknowledged in the regulation, then you are certainly free to submit a comment and see if ARB will change its mind during the 45-day comment period. When the 45-day comment period is over, then, which is about 6 weeks, so they've only got maybe a week in October and another 4 weeks in November and the first week of December. It goes to the California Air Resources Board for adoption. Given the fact that everything takes effect on January 1st of 2026, we would expect that the Air Resources Board will adopt the regulation with any modifications that ARB intends to make based on the 45-day period comments. They will deliver a final regulation to ARB, and we expect that to be adopted in mid-December, before the holidays.
Okay, thank you, John, for those clarifications. I don't think we have, I think you already answered the question on the exemptions. So it looks like those were the end of the questions. Do you have any final comments before we close the webinar?
Well, I believe it's safe to say that the webinar slides will be available. Could you describe that process, please?
Yes, after the conclusion of the webinar, we will be sending out follow-up emails that will have a recording of the webinar as well as a PDF of the webinar slides available for everyone who attended. So yes, those will be going out in the next few days.
Great. And again, I just repeat my recommendation that if you're an interested party, make sure that you download the draft regulation, which should be coming out any day now, and participate in the 45-day comment period. It is possible that If enough people make a comment, that ARB will listen, and especially for this first reporting year, make adjustments to the final rule. But that's between you and ARB. I can only comment on what's in the legislation, and I can't really speculate on what will be in the final regulation.
Okay, sounds good. Thank you, John. And thank you everyone for attending. We appreciate your time. And as I said, I'll follow up with the recording and the slides as well. So thank you everyone and have a nice day.
Thank you.